Welcome back. We still have some time until the opening bell on Wall Street, so let's take a look at what's moving here this morning. We're going to start with a dive into today's Morning Brief newsletter, written by our very own Julie Hyman. Julie, loved the Morning Brief newsletter today. Loved it.
I'm joining the Morning Brief rotation. I'm going to be writing every Friday newsletter, at least for the next little while here. And indeed, I looked at the idea of that tech is seemingly so hit by inflation concerns and interest rate concerns, seemingly more so than the broader group. And I tried to figure out why exactly that's happening, right? If you look at rising interest rates having an effect on financing costs, the cost of capital, that doesn't just affect tech, that affects everything. And tech, as far as I can tell, doesn't have a meaningful higher debt load, for example, than other groups necessarily. I mean, look at a company like Apple, which got smacked on Tuesday. And it's got lots of cash, right? It doesn't matter if higher financing in the case of Apple. So if you look at the Yahoo Finance Interactive and you look at the week and what we've seen for the NASDAQ 100, indeed, of course, it's been an underperformer. It's down 3.2%. It's an underperformer on the year, down 27% compared with around 17 for the S&P 500. And you've seen that play out with many of these individual movers as well. Here's the 1 week look at what we've seen for these large cap tech stocks, the likes of Alphabet and Microsoft and Apple and Amazon. There's also, of course, the read-through from consumer spending, right? It's not only that companies have to pay higher costs, it's that everybody has to pay higher costs, right? As we saw yesterday, mortgage rates hitting 6% for the first time since 2008. My grocery bill went up 13.5% year over year last month. Like everybody,
your grocery bill went up 13%?
Everybody's grocery bill. That's what CPI showed.
I would say that.
Everyone's grocery bill went up. That's how much the cost of food at home went up year over year in August. So if everybody's spending more for that stuff, as we've been talking about, you're going to be making more decisions. Are you going to buy maybe not the most expensive Apple iPhone, or you're not going to update, or whatever it may be? So there are implications there. And then there's also just like the feeling, you talked to Eric Sheridan of Goldman about this out in San Francisco, that it just kind of the vibe is not as good for risk on sectors like tech at a time like this. So there's a lot, and there's semiconductors
and a lot of the companies
too.
Haven't
We
done
talked
well.
to Paul Meeks about that.
A lot of the companies haven't done well.
Exactly.
They're just not doing well.
Exactly.
I've pulled back on some of the purchases that I was planning to make on the tech front.
Right.